If you want to make it to the top and stay there, it's all about finding your balance. That's true whether it's a dancing lion in Hong Kong or the economy. China is slowing. Can it find new ways to grow without crashing? Hong Kong used to rely on factories too. 15 years ago, this street would have been full of peddlers. As the economy has developed, they've shifted to the services sector. But most of the people they're serving on this street are mainland Chinese. When I first came here in 2005, it wasn't like this, she tells me. Since 2010, there's lots of mainlanders because they have lots of money.
These mainland Chinese are heading home. These consumers are who the Chinese government is counting on to make a crucial shift in the economy away from factories and towards services, shops, education, insurance. In fact, for the first time ever this year, the service sector is a bigger part of the economy than manufacturing.
It's not that Chinese factories are going out of business. Industry is still growing. It's just that services are growing more quickly. But it's still raising worries.
We want to look into a sustainable long-term growth. I think that consumption should be treated as a goal of the growth. But I would never recommend any society, any country to treat consumption as a driver of growth alone.
Hong Kong may have now gone too far, relying on shoppers, and China has been watching. Still, one of Hong Kong's most prominent businessmen warns, China has no other option.
We're talking about 100 million, 200 million, and perhaps 300 million being able to spend their money on their own goods, which of course would strengthen the economy in a very balanced way rather than having to rely on outward investment. So it's not a question of whether you will succeed or not. It's got to be the way forward.
If China takes the easier path and relies on debt-fueled investment, it could lose its balance. It may not crash, but could slow considerably. The last thing that anyone wants to see. Linda Yu, BBC News, Hong Kong.